Hi folks, and welcome to Meaningful Money, episode 295, brought to you with the help of my good friends, Seven Investment Management. Today, we're going to be talking about emergency tax. I was recently asked about emergency tax, how it works, and why it even exists. To understand emergency tax, you have to understand something else called the personal allowance. I explain the personal allowance in much more detail here, but put simply, it's an amount of money that each of us can earn free of income tax in any one tax year. This personal allowance determines your tax code, and it's this code that your employer or pensions provider puts into their payroll system. The system then determines how much tax is deducted from your pay each month. Your tax code is worked out like this. The personal allowance, currently 9,440 per year, is divided by 10, and then they put a letter L on the end. I've no idea why. And that is the basic tax code. This is also the emergency tax code, or the default tax code that you'll be given by your employer or pension provider if they don't know any better. Why might you be given an emergency tax code? Here are a few scenarios. If you start a new job and you don't have a P45 from your old job in the same tax year. You used to be self-employed, but now you are employed. You started a second job while keeping your first job. Or maybe your tax situation has changed part way through the tax year, perhaps because you started drawing a pension. This is really important. Getting the right tax code is the only way to make sure you pay the right amount of tax. Your new employer and HMRC, that's the tax man, they need the right information if you're going to be taxed correctly. When you leave a job, you should be given a form called a P45, which says how much you have earned in the current tax year and how much tax you have already paid. The P45 is in 3 parts. Now you keep the top sheet, you give parts 2 and 3 to your employer. Your employer gives part 3 to HMRC. And now everybody's got the information they need to get things right. If you don't get a P45 from your old employer for whatever reason, you can complete form P46 and give that to your new employer, and that'll give them all the information they need. Fact is, if your employer doesn't apply the correct tax code, you're going to end up paying too little tax, or more likely, too much. Now your employer will inform the HMRC about the tax code they are applying automatically each time they pay you. Once HMRC has those details, they will confirm to your employer whether or not you're on the right tax code. If an adjustment needs to be made, your employer will deduct the rest of the tax that you're going to owe for the year equally across the rest of the year. And at the same time, they will refund you any tax that you have overpaid. If you get to the end of the tax year and you think you have paid too much tax, you need to contact HMRC to arrange a refund. So, emergency tax is simply where you've been taxed incorrectly because the wrong tax code has been applied to your salary or to your pension. Do you have a financial question you'd like me to answer? If so, get in touch here at meaningfulmoney.tv/feedback. Thanks for watching.